Hey guys, Alisado with Simple Option Strategies. Hey, today I'm going to be sharing a trade that I did on February 14th, Valentine's Day. This was a combination of call spreads and put spreads where I bunched them up and placed those, and we made 221 bucks on this day. Not bad for 5 positions that I put on. I wanted to share this with you. It's just a typical trade that I do for 0 DTE. This one came out positive on all fronts. Hopefully you'll like the experience. Make sure you like and subscribe to our channel, and we'll be giving you a lot of these 0 DTE trades here and in the future. All right, enjoy the trade. Thanks. Okay, so let's get into this trade here. Now, a couple things I wanted to share with you right before we go into this is that before the market opens, I create 4 saved trades, 2 call spreads and 2 put spreads, in order to be ready to get in right when the market opens, because it takes advantage of the implied volatility, which is really important. And usually you get a high degree of implied volatility at the beginning of the trading day and towards the end of the trading day. These are 1-minute candles. When you're actually trading and you're watching the market, this candle takes a minute to form. So keep that in mind. So the first trade I put on right at 9:30 was my call spreads. And I wanted to put on the call spreads because during this period of time that I was trading, the markets were volatile. And usually what would happen is when the market would open, the market would immediately go down enough to give you a chance to put on the call spread. And that's why I wanted to put on the call spread first, because I anticipated the market moving down first. Okay, and I wanted to get it in. Plus, looking at the premiums that I plan to put on, you can see here that 45.10 is the short strike, and when the market opened, we were at 44.12 to 17, around that area, so almost 100 points away. So we had a good distance from the market to put this on. So here we go. So I put on the first position, and it was 55 cents, and the second one right around there. Okay, I got my 2 call spread positions in. Once I got those 2 in, I placed the put credit spread, and that was around here. And then you can see here that the market went further down. That was 933 was my third position, and that was a put spread. Market moved down a little bit further, and I put on the third position for my put spreads. So here they are, all 5 of my positions I put on. After that time, I just let it go. And what I do now is I set to close my call side and my put side at 10 cents. So let's see what happened here. Went up a little bit and was in that range. Went down, okay, started going down. When I was looking at this, I had 2 positions at 10 cents, but then what happened was that the market started going down. And let me give you a perspective here from the previous day, right? It's not so much, but you can see it kept making newer lows. And then I started looking at the premium for the call spreads. It was shrinking. And so by this time it was around 30, 35, and then boom, it went down further, and then it really started getting to around 25 to 20. And then when you start seeing the 25 to 20 area from 20 to 10 cents, it would have to go down a lot. And so what I did was I changed my closing order from 10 cents on the call side to 20 cents. And let this thing go. It went down again, and you can see here that it went down right around here, and it was 10:07 in the morning that I was able to get out of the call spread, the 2 positions that I had on right around here, and I closed them for 20 cents. Now let's see what happens. Keeps going, goes down, goes up, another dip down. I'm not sure if I would have been able to get 15, but I was happy that I closed the trade for 20 cents because it was a good gain, and that's within my parameters. So you can see here, went down, down again, and then went back down, down again, so further. And so I've done a few videos of finding the bottom, and this is exactly what happened. You have a low here created, you wait for it, and what happens is it goes further down. So it breaks that support and goes further. You don't have a bottom yet. Then it goes down here, it tries to find support, it broke, you still don't have a bottom. And then finally, you went down here, you still don't know whether you have a bottom, but here's what happened. Went down a little bit, okay? Broke it again, okay? Now went down again. Let's see if it does go down. Yep, went down again. This time, it didn't break support here. Now you're getting a higher low. And so maybe I would have been able to get 10 cents on this, but I already had a good profit and I didn't want to risk it, because you don't want to leave money on the table. You definitely don't want to turn a profitable trade into a losing trade. And at this point, I was so far away from the put side, I just let this thing run. Now we really went up. And there's a lot of occasions where the market still keeps going down, but it doesn't go down enough to get the put side threatened. And even though the market goes against me, I can still get out for a nice gain. So at this point here, the market went up and I wasn't able to close it yet. I did look at it and saw it at 20 cents, 15 cents, and right around this time here, 12:31, the position closed and I was out of the trade. So you can see here now, pretty range bound. Looks ominous, right? But it went down quite a bit to 43.70, and remember the where it would have breached would have been 42.90. So we were way far away, and I could have let these expire and it would have worked. So hopefully this was good. Hopefully you learned something here. Remember to hit that like button and subscribe. We'll give you a ton of these videos over and over again so you can learn. All right, guys, thanks and have a great day.